now summarize what I have said so far. We are living in very volatile times. The sudden announcement of an output cut by the OPEC Plus a few days ago and the resultant jump in crude oil prices is yet another evidence of this volatility. The overall outlook thus remains dynamic and fast evolving. Our monetary policy in the recent period has aimed for a non-disruptive normalization from the pandemic-era stimulus measures. Even as monetary policy moved decisively to withdrawal of accommodation, financial conditions evolved in line with the productive requirements of the economy. Growth has since then become broad-based. Inflation has softened from its elevated levels a year ago. However, it still remains above the upper tolerance band. Projections for 2023-24 point to a softening in inflation, though the disinflation is likely to be gradual and protracted, given the rigidity of core or underlying inflation pressures. At this stage, we remain watchful of the evolving outlook and the impact of our actions during the past 1 year on the broader real economy. While we have kept the policy rate unchanged, it is important to bear in mind that this decision was taken on the basis of our assessment of the macroeconomic and financial conditions with reference to the information available up to today. Our job is not yet finished, and the war against inflation has to continue. And this has to continue until we see a durable decline in inflation closer to the target. Let me read again. Our job is not yet finished, and the war against inflation has to continue until we see a durable decline in inflation closer to the target. We stand ready to act appropriately and in time. We are confident that we are on the right track to bring down inflation to the target rate over the medium term. As we proceed towards this objective, I recall the wise counsel of Kautilya 2000 years ago, and he said, and his statement was as follows: "Be not slack before the job is finished. Be not slack before the whole job is finished."